Hey everybody, happy Friday. Welcome back to Markets for Millennials. This is the weekly market wrap ending from August 23rd to August 27th. Go ahead and take a moment and smash the like button, hit subscribe, and share it with somebody if you think that they will find it helpful. We'll start off by taking a look at DXY, and the dollar got destroyed today. When I say destroyed, I mean, come on, like the drop wasn't nearly as deep as it was on this 8-hour candle here on August 13th. So maybe I'll go to a daily just to start out. So we had a drop really of about 0.39%. And so when I say destroyed, I mean, like maybe I'm just being a little facetious, but the point is that the dollar is being sold. And again, the DXY is a basket of currencies, primarily 50% towards the euro, but to see it come down, it is making this lower low compared to the last few days. But what's really going to be telling over the next couple of days into next week is, are we going to get follow through on this move to the downside? And so I'm looking at this lower low, or at this swing low right here from August 13th and August 16th. And what I'm wondering is, are we going to drop below that? Now, even if we do come below that, we've got the bottom of this ascending trend line, which forms the basis of this channel, right? This is kind of a prime trend line to the upside, and our price has been following in this range, kind of this overall range, and then I've got these cloned trend lines in between, and so even if we do fall below the swing low from August 13th, we still could find a floor here, maybe around the 92 level, or 92 spot 10 or 92 spot 15. And we could, for all we know, we could come down and then come right back up, because right now the near term momentum has not been broken. We are still, as long as we're above this ascending trend line, our momentum is still to the upside. Even though I've been saying this a lot, and people are talking about this, the overall trend is down. The near-term trend is up, and we already did make a higher high compared to March 31st, March 30th, 31st, April 1st. We did make a higher high, and so the question is going to be, are we going to get, was this move kind of a overreaction, or maybe was it an underreaction? Are we going to get follow through to the downside and break through this? And I think because, we really, except for in June, we didn't really get any testing of this trend line since the middle of June. And so I suspect that if we follow through going into next week, that we actually will pierce this, and then it'll be a question of how much of a retest. I mean, do we get a retest? How much of a retest will it be? And will we hold the retest and resume down? That's where I think it's going. Really, Jackson Hole was today. The speech was today. I've got kind of a snippet up here. Maybe I could zoom this in a little bit. Basically they talked about, for now, policy is well positioned. As always, we're prepared to adjust policy as appropriate to achieve our goals. They've basically said this part, being prepared to adjust policy, ever since I think even like April or May or so of 2020. They've been saying that we're ready to adjust policy if it's appropriate. We're ready to do, whatever we need to do. But really what matters is policy is well positioned. They're not going to make any changes. They did talk about that they have made progress toward maximum employment and price stability. And they said, he said, my view is that the substantial further progress test has been met for inflation, which is interesting because they talked about wanting to see, substantial progress for inflation for multiple, a long period of time above the 2%, inflation rate that they were talking about. But the one thing that they keep going back to was they said that even though we have more progress for employment, we have the spread of the Delta variant. And so they keep going back to the issue of the pandemic. right? The pandemic and its unprecedented toll. And so really what that means is a whole lot of nothing. The Fed is not going to taper. A lot of people in the media have looked at this as, oh, they're just not going to taper yet. They're still going to, a lot of people think they're still going to do it this year or maybe at the beginning of 2022. I honestly don't see that on the horizon, at least in the near term. Definitely not Q4 as we get ready to go into the last month of Q3. I don't see tapering happening in Q4. To me, there wasn't even a hint of that because the way I see it, they said the same thing that they've been saying for a long time, that they will use, they'll continue to support the economy. They talked about that. And also that they will, let's see here, and also that they think they're well positioned, but that they'll adjust if they need to. And that's basically been what they've been saying for a long time, for well over a year now. So anyway, on that news, it was really interesting because I talked about this in a stream. Let me go to my 3-minute timer. You can kind of see during the period of time going into the press conference, you actually saw the DXY turning south early on, front running that news, and then we had a quick spike up, and then it came way down. And then we've kind of just been down ever since, and we kind of just have stayed in the same range kind of ever since, goodness, 15 minutes in, we're at the same place that we, wicked down to 3 minutes in. And it was interesting because I talked about this in the stream that I could totally see a situation where price reacts one way, then viciously reacts the other way, and then, and just kind of that back and forth, and that's exactly what happened. So definitely not a time to take new trades if you weren't already in a trade. And usually it's a pretty good idea if you're in trades like dollar trades, going into an FOMC to hedge whatever side you're on, because it's just so unpredictable and the dollar moves can be so big and so fast. And on that note, yields have also come down once again. And so again, we've, I talked about this in my stream recently, that I wondered if we were getting this rising wedge, and that I was interested in seeing, if what was going to happen on this after this daily candle right here from yesterday, if we were going to get movement up through this descending trend line. And so I was basically waiting to see what the market was going to show me as far as where the actual support and resistance is. And now that this price action has taken place, to me, it seems safe to assume that this, this horizontal, this descending channel, it's a very shallow descending channel, but it looks like this is the trend now. And so I think what I'm going to do is I'm going to kind of darken that. I'm going to keep it. I won't delete it. I'm going to keep it because I definitely want to be apprised of it in case it comes into play again. But it definitely looks like these descending trend lines are where the trend is at, based on what I've seen now, and what I'm going to be looking for over the next week is, will this price action confirm? Like, will we confirm that this is the channel? And so the spot that I'm watching is this, short ascending trend line that I made, which was forming, the wedge. So I had this wedge, right? I showed that wedge previously. And so I want to see if this holds. And if it does hold in this area, is it holding on this descending trend line or is it holding on the ascending trend line? Because it's entirely possible that what we're actually getting is a sideways triangle rather than a wedge. And the reason why that's so important is usually an ascending wedge pattern like this is a bearish pattern that is going to break down. Not always, not 100% of the time, but that's pretty typical. But if this trend line asserts itself, what we're actually seeing is a sideways triangle. And these can break either to the upside or to the downside. There's really no telling. And so price action over the next few days, again, if we hold support as on this ascending trend line, then I'm going to be proceeding with caution, because it's possible that the market is trying to tell us that, like if you think to the upside, yields may go up. It's entirely possible. It doesn't feel like it now because of the Fed's policy, and just the decisions that they're making, but it's totally possible. And so that's going to be now the hot spot to watch, is this is kind of this zone right here. So that's what's going on there. All the equity markets just took off. Again, if I go to a 3-minute, basically as soon as the press conference, or as soon as the Powell's testimony came out, it just shot up like a rocket. We'll do that also on the NASDAQ, boom, and the Dow, boom, and the Russell, boom. That, although this was a little bit less dramatic to the upside, at least in the first couple of minutes. So going back to my daily chart, this was actually a good sign for the Russell. Getting back above this ascending yellow trend line. I'm actually going to darken that one a bit. This has been, to me, the most important line on the Russell. And as we've come sideways ever since February, we've been kind of getting closer and closer to this trend line, and came below it, tested it. I actually did adjust it a little bit from where it previously was. I adjusted the angle a little bit, because I actually saw this as the breakdown coming in for the retest, and it looked like we were going to resume down. You actually can see here, we have a resumption because we made a lower low off the resistance, off the ascending trend line resistance. But then today, because of the Fed, because of Powell's speech, we just shot up. Okay, this move was 2.77%, and so that was pretty amazing. Looking at the Dow, what's interesting is, even given that today the Dow was only up 0.69%, not even a whole percent. And I kind of have this, it's a really squiggly line, so it's not exact, but I have this trend line. What I'm going to be looking for over the next week is, where's the Dow going to go? Are we going to consolidate and then take off? Are we just going to do more of what we've been doing the last couple of weeks, just these sharp rises, quick drops, sharp rises, quick drop, sharp rise, quick drop? That's what it looks like. We'll see. And then on the NASDAQ, we are at all-time highs. But again, multiple times I've adjusted this trend line. And I've had this this channel established for a long time. And so again, the momentum that I'm looking for is, at least on the downside, is as long as this trend line, and I'm only highlighting part of it, as long as this trend line is intact, momentum is still to the upside, and it will remain to be so. So I mean, but we could, we're at the top end of this, of this channel, and maybe we could add another. If I clone this, maybe I can add, a spot. Maybe I can do this. So we have plenty of room that we could go to the upside. Okay, let's see. Spread this out a little bit. We have plenty of room that we could go to the upside before hitting that upper band. If we use the cloned trend line. So from where we're at now, where we're closing at, that's another 3.5% to the upside. But even though we are at all-time highs, it's not a doomsday thing. It's not fear-mongering. It just is concerning, because on the upside, this trend line has been good resistance. We definitely have a couple instances where we got big sell downs from this level. And so I'm going to be watching to see, now that we're at the upper band. And because according to what I put, when I put this wedge in, because the market was respecting that trend line to the upside to make the wedge. So I'll put this in yellow so maybe you can follow what I'm saying here. So I put that wedge in because price wasn't coming down to test the bottom of this channel. And then we did break down and came in for a retest, broke down further, so we resumed down. But then we had a couple of really good days over the last week and a half. And we're up at the top here, and I wondered if we would roll down here, but because this was also a resumption down if you want to go off the same trend line, but price came up. So what I'm wondering is this spot, which you notice here is a confluence of resistance. So these are usually the good, like the more sure places to sell. Not that I'm saying you should sell, not financial advice, but if we were to hit this spot right here and come down, we could be looking at 8%, 7%, 6%, depending on over the time period in which it happens, of a correction. And it's totally possible. And I think like because of where we're at with the markets, and I feel like people were scared and now they don't seem to be scared anymore because of the FOMC. I just wonder if now wouldn't be the right time for a bit of a sell down. But of course, like like we've talked about before on this channel, over time, over the course of the last few months, every time we have a big sell down, actually let me put the EMA. I don't like the EMA, but I'll just put that up there because it's a little bit better. Every time we get a selling impulse to the 50-day EMA, it's usually bought up, and it's so hard to see the possibility of anything else happening. But I am like at these levels, I'm not buying the NASDAQ. And I mean, like, sure, maybe, I've been saying that for a while. So sure, maybe I'm missing out on all this price action. But for me, I'm in Bitcoin, full disclosure. And so I'm not concerned about the NASDAQ. I've been saying that I wanted to be careful about the NASDAQ, I think, like ever since the middle of June. So maybe the NASDAQ has come up 12% since then. But if you just, swing over to Bitcoin, so where was this? The middle of June. So, middle of June, we've had sideways price action, middle of June. So, it's 35%, even with this sideways price action. And the potential upside for Bitcoin because of the cycle, is way better. And so I'm not really concerned about missing out on the NASDAQ. I don't have any FOMO about it. And because we've gone not to say that a crash happens all the time, but it is pretty normal to have a 10% correction. And so, the further that we go without a 10% correction, the more likely it is to me that when we do get a correction, we go more than 10%, like maybe 10 to 15%. So like if we went 10%, if we went 10% from here, we'd go under 14,000. If we went to, 15%, right around, so it would be 16% down to the support at 13,000. So there's all sorts of different things. There's all sorts of possibilities. You can't make your money on what is potentially going to happen. You can only make your money on what is happening. And I would much rather be invested in an asset that I'm more sure about, and that it's much higher upside. So that's where I'm at. S&P, again, all-time highs, just continuously grinding up higher, but we're still staying in this range. I don't know, tell me this doesn't look like a wedge, like just a really long wedge. And I don't know, somebody was telling me once that that when you have a wedge, the selling impulse that comes out of a wedge is approximately half of the increase. So if that's the case, I mean, that would be 15%, right? Taking back about half of this price action in the wedge if we dropped from where we're currently at. So I don't know, I'm not concerned about chasing the equity markets higher. And especially because of the way the markets are just always so spooked about potential tapering. To me, it's a pretty big deal that the markets would panic so much about potentially the Fed dropping their purchases by even just a small amount. The markets are just addicted and drunk on QE and on easy monetary policy. Take a look at gold. Gold had a really nice day. Gold up almost 1.5%. Got above this trend line. I might even drop that down there. That looks a little bit better. You can actually see this retest and resumption off if I adjust it down that way, and the line still holds, so that's good. But so yeah, sure, it had a nice day, but look over the course of the last couple months, it's had a lot of nice days. Had a nice day July 29th, I'm sorry, August 13th, August 23rd, July 29th, July 14th. These were all great days, and yet gold still hasn't made a higher swing high than July 15th or July 30th. So to me, gold is not, I'm not getting excited about it. And I won't get excited about it. It doesn't mean I won't buy some if I have available funds, but I'm not going to buy it until at least we get above 1914. To me, that's my level. Maybe I just got to market. That's my level. Okay, unless we get above that, I'm not getting excited about it. And that's just me. Silver, even with a good day, we couldn't even get above this level. So let me find my gold silver ratio. So today was in favor of silver, but we're still just, the trend is still in favor of gold. That's just what it is. And I keep saying it, and I just feel like so many people are just not listening. Like, look at that market symmetry right there, by the way. Wow, that was beautiful. Resistance, support. Okay. So in this case, I don't know how many different times I'll have to say it, how many ways I'll say it. If gold is outperforming silver, then that's not typical of a precious metals bull market. That's more typical of like risk off, concern, like uncertainty, etc. So while silver had a great day today, it did outperform gold specifically today. It has not gotten above any of our critical levels. And for silver, silver is sideways and has been sideways, basically not kind of down. Gold is going kind of like this, right, to the downside. Silver's going just plain sideways. So, silver's got to get up, got to make some good headway before I get excited about it. I think it's going to have to be somewhere around the 26 level before I get excited about it, and we're nowhere close to that. So, Bitcoin, doom and gloom. Let me go to an 8-hour. Doom and gloom because people were watching this trend line and they were like, OMG, we broke down, and look at what's happened. And this is why it's so important to think about market symmetry. It's above this trend line now, and it broke above kind of this like flag. A lot of people were kind of drawing a flag right here, and that works. That's good. But obviously, the most important thing is what's the top side of the flag. So I had the top of the flag marked already, and we broke above it. We broke back above this ascending trend line. But everybody that was all doom and gloom because we broke this trend line obviously hasn't been watching CTM and obviously hasn't been watching my channel because if I bring up my trend lines, my clone trend lines, and maybe I should turn that one off for a second. My trend lines are holding. My trend line, which if you recall, I talked about this previously. Let me just darken up that trend line from over here. That's what the trend line is cloned off of. And crazy story, I know you're not going to believe it, but that trend line works here on the upside and on the downside and cloned all in between. Okay, and if I go to the daily chart, the daily chart looks better, So, what now? So I've never been worried, and I feel like, let me get this other trend line back. If you can see the difference, so many people freaking out about the white trend line, and I'm just like, I'm not worried. It's like any of the other things that I've said, that have these channels that until the prime line breaks, I'm not worried. And so, and yeah, sure, we may sell down all the way to this line and maybe that'll hurt. But, if you want to look at maybe a horizontal level, look at this horizontal level. Boom. That level is basically, you can adjust it a tad, maybe put it right here. And we're still going to catch that level on the, on this bottom ascending trend line. So not concerned at all. So many people though doom and gloom because we broke a trend, the trend line that they were looking at, because they're not paying attention to market symmetry, and they're freaking people out, causing people to sell. People were talking about how everybody was selling because the Fed was going to taper and that was going to kill Bitcoin, and so they were taking profits ahead of that. And maybe they were, maybe they weren't, but this was nothing to be concerned about. I mean, like, where are we at from the bottom? Do I have to do this? I have to do this again. Even today, 66% from where we were. 66%. That's crazy, right? We did that in 2 months. We've had a 66% rise. We've had more of a rise than the S&P has had over the course of this whole year. And so there's nothing to worry about. So everybody needs to relax. I'm leaving this trend line like this because it just is prettier. It makes my chart look less messy. But it's definitely nothing to be concerned about. And until we break those prime trend lines that I identified, I'm not going to worry. And if you look at it, we're kind of right in this tight range where we had a lot of 8-hour candles in this range. We're right in there again. I just don't think it's going to be that long before we make another high. And so the level that I'm looking at horizontally is right here. I can't see what that is. It's around 51,326, and that kind of goes back, if you go to the daily chart, comes back to the closing low from March 25th. I think that level's going to hold. I think that level's going to be a lot better resistance, because you can actually see, if I come back to our, to this area, resistance here, support, support, resistance, right? So I think that that's a good level to watch. And I mean, we're not far. We're just, again, continuing to work our way up. And I think the sky is the limit. So that's what's going on. Looking at WTI really quick. Somebody mentioned this to me outside of YouTube, that I haven't been talking about WTI, and it's really not really, it's not really my thing. I think other channels did it, so I think I got, I was like, oh, I want to do what other channels do. But I'm not going to really pay attention to things that I'm not investing in, and so I'm not so concerned. But you can kind of see, by the way, look at this TA. Look at these trend lines that I had been putting in. And then did you notice while I was talking just now, I cloned this trend line, and look, a perfect bull flag. What do you know? So that's the look on WTI. We've been kind of on this downside move ever since, what is this? Ever since July 5th. It's just been kind of getting killed, and going over to the sectors. If I go to, where are you, XLE? XLE's been getting killed. XLE, how far down is XLE? So today XLE is 13% down, but at one time it went as far as 20% down. That's just outrageous. So let me go back to WTI again, really quick. It's a good lesson. I mean, like, if you think about it, where do you want to draw the trend line? It's like, okay, so where could we draw the trend line here to get an idea of the symmetry? What do you want to do? Do you want to do it like this, right? So maybe now because we broke down, maybe we're getting back above it, retesting it, and we're gonna resume off. So if that's your trend line, then that's bullish. But the problem is I don't see maybe a little bit of symmetry there, right? So was that our little channel? I don't know. I feel like maybe it could work. Yeah, that doesn't look too bad actually. Wow, TA, wonderful. So if that's the case, then that means that on WTI we are back, back above, and so then the trend would be intact. So what I would be doing if I had more time and I wasn't recording this and doing this in real time with you, then I would really be looking to see where I could find the symmetry. And I just don't see it oh, there we go. There's some good symmetry right there. So yeah, this is a channel. And it looks like we're coming back into it. So maybe that means that WTI is going to be back moving to the upside. So definitely the place to watch is going to be in this zone right here, because you got to get above the ascending trend line right here. Or I'm sorry, the descending trend line. Got to get above it, got to retest it, got to resume off. And that's my view of the markets today. So thanks, Mr. Powell, for making markets go burr. Money printer go burr. Thanks for watching. I'll see you guys next time.